Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to our weekly podcast. We just concluded one of the most anticipated weeks of the second quarter of 2023. Global equities rallied on improving sentiments amid policy stimulus in China and US Fed's decision to keep rates unchanged in its June policy meeting, and strong US consumer spending data and improving consumer sentiment. During the week, the US Fed kept its policy rates unchanged as it decided to wait and watch the effects of policy action thus far to trickle further through the economy. However, it indicated further that rate increases could be appropriate this year to bring inflation closer to 2%. This was followed by European Central Bank raising policy rates by another 25 basis points to its highest level in the past 22 years, and indicated that it is not done raising rates as inflation remains high. Major global equity indices ended higher for the week, with the MSCI World, MSCI Emerging Markets and Asia ex-Japan indices up 2.7%, 2.1% and 2.9% respectively. In the US, the S&P 500 index, Nasdaq Composite and Dow Jones Industrial Average rose 2.6%, 3.2% and 1.2% respectively. Back home, Indian equities continued to rise for the fourth consecutive week but underperformed global peers. The Nifty index gained 1.4%, coming closer to its all-time high amid positive global cues and strong foreign investor inflows. Broader markets outperformed Nifty this week, with the Nifty Mid-Cap and Nifty Small-Cap Index up 2.9% for the week. Among sectors, Realty and FMCG were the best performing sectors, with gains of over 3.5%, while banks was the only sector to end in the red, falling 0.1% for the week. The Indian fixed income market had a relatively stable week, with Indian government bond yields remaining flat across the curve as slower than expected inflation and lower US bond yields balanced the impact of heavy bond supply at the RBI's weekly auction, where it sold 330 billion worth of bonds and receding banking system liquidity. The 10-year Indian government bond yields closed flat at 7.04%, while the 3-year and 5-year Indian government bond yields closed by 1 basis points and 0 basis points respectively. The INR appreciated against the USD as improving risk appetite, foreign investor inflows and a weaker USD indicated the impact of rising US bond yields and higher crude oil prices. For the week, the INR rose 0.6% to close at 81.9 per dollar. Brent crude oil rose 1.1% to close at USD 75.6 per barrel. Amid the announcement of policy stimulus in China, US Fed's decision to pause further rate hikes, and news of supply cuts by Russia. Coming to macro updates for the week, the first was on India's consumer price inflation, which eased to 4.25% year-on-year in May 2023 from 4.7% in the previous month and below the market forecast of 4.4%. This was the lowest reading since April of 2021. The moderation was driven by a fresh slowdown in inflation for food article prices, which fell to 2.9% amid significant deflation in oils and fats, vegetables, and meats and fish. Further, inflation also rose at a slower pace for transport and communication, housing, and fuel and light. The second data was on India's wholesale price inflation, which contracted further 3.5% year-on-year in the month of May 2023, compared to a decline of 0.9% in the previous month. This was driven by a slump in the cost of manufacturing articles, mainly basic metals and textiles. Also, prices contracted for fuel and power, primary articles, and food. On a monthly basis, wholesale prices contracted 0.9% in May, the second straight month of decline and the sharpest drop in 5 months. The third data was of India's trade deficit, which widened further to USD 22.1 billion, the largest gap recorded in the past 5 months and higher than the previous month's reading of 15.2 billion. Exports were down 10.3% year-on-year, while imports declined slower at 6.6% year-on-year. And the final data was on India's industrial production, which rose 4.2% year-on-year in April 2023, accelerating from an upwardly revised 1.7% recorded during the previous month. The improvement was driven by a pickup in factory activity, which surged 4.9% compared to a meager 0.5% growth recorded in the previous month. Elsewhere, mining activities increased 5.1%, while electricity generation fell 1.1%. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.